Hello and welcome to the MetaPropcast, the podcast of innovation in real estate technology. I'm your host, Phil Russo. The MetaPropcast can be heard on iTunes, SoundCloud, Stitcher, YouTube, and Google Play, and is a production of MetaProp NYC. Hello, and welcome to the MetaPropcast, the podcast of innovation in real estate technology. I'm your host, Phil Russo. We're speaking today, Tuesday, April 25th, 2017, with Satya Patel, partner and co-founder of Homebrew. Satya, how are you?
I'm doing wonderfully, thanks. How are you?
I'm super. A pleasure to speak with you.
Likewise.
Tell us, what is Homebrew?
Homebrew is a San Francisco-based seed stage venture capital firm focused on providing operational support and capital to founders who are building companies within what we refer to as the bottom-up economy.
And what is the bottom-up economy by your definition?
The bottom-up economy is a simple idea that as technology has gotten cheaper, more flexible, more accessible, it's finally being leveraged by constituencies that historically haven't been able to use it effectively. Everybody from individuals to small businesses to traditional industries, which is why we're talking today.
Very interesting. As a seed venture capitalist, what do you look for in startups?
Ultimately, at the stage at which we're investing, there isn't a lot of data, so we're evaluating three things: team, product, and market. From a team perspective, we're looking for founders who are trying to address a pain point that is almost personal to them. In many cases, solving that pain or problem is even more important than building a company in some ways. And so we really look for founders who are addressing that personal pain and building a product that we like to say has a very narrow near-term focus, but a broad long-term vision, within a market where it isn't necessarily true there are billions of dollars being spent today, but where the pain that's being addressed is large, meaning felt by a lot of people, acute, meaning that it is one of the top three pains that they're dealing with day to day, and valuable, meaning that they're willing to pay to have it addressed. So ultimately, that's what we're looking for.
Very succinct. You have a lot of experience to do this. You've come out of two of the most dynamic tech companies in the world, Twitter and Google. What did you learn at each of those stops, and why did you leave there and then move into this part of the world?
Geez, so many things to have learned from those experiences. As you said, two incredibly dynamic, fast-growing, impactful companies. But I think the most important lessons that I learned from both companies were about people, about how to identify great talent and recruit and hire great talent, around what it means to be a good and a bad manager, around the importance of culture and values. Those things were lessons from both companies, and probably amongst the most important lessons from both companies, and certainly feed into how we think about startups today. I left both companies for different reasons. I joined Google when it was a relatively small company, and within the course of 4+ years, it had grown to about 8,000 people from the few hundred it was. And so it just was a different type of company, and how you got things done there had changed pretty dramatically. The company was full of amongst the best people I've ever worked with, incredible mission, but it wasn't the right place for me for the next phase of the company's development. And Twitter obviously was a very different place based on what you've read and I'm sure heard. And ultimately I left there because I didn't feel like I could do my best work and have an impact on the organization in the way that I wanted to have it. So, in general, Hunter and I both believe, my partner, that companies go through phases, and as you approach each new phase of a company's development, you have to figure out whether that next phase is a fit for both you and the company. And in those cases, I decided it wasn't. And in both cases, I left to become a VC. And when I joined Twitter, it was moving from VC back to the operating side. And here we are back at VC again.
It's true that no matter how great the organization, at certain stages of development, it may or may not be the right place for any individual. So that it's more and more the scenario that people of talent and vision keep changing and keep moving on to other things. It's a brand new world, particularly in technology. And at Homebrew, you invest in a wide range of startups, including in property technology, Bowery, Building Connected, Managed by Q, and Pillow. What attracted you to property technology and to those companies in particular?
We're really excited about property technology. One, because it's an enormous market, obviously, and everything from the actual buying and selling of property to the management of property to the maintenance of property. Every aspect of kind of the PropTech value chain or the property value chain is enormous, and secondarily has not been impacted by technology in any material way historically. And so that represents tremendous opportunity, and one in which we've invested, as you mentioned, pretty actively. Specific to these companies, ultimately we're drawn to the people who are building these companies, and in each case, incredibly unique founders, as I mentioned earlier, who are building companies that are based upon personal pain or problems that they've experienced firsthand, and attacking markets that are enormous in scope, where the pain is acute and where there are clear business models. And finally, doing it with products that we think do one thing really, really well for one type of customer initially, but have the ability to grow our footprint both in depth and breadth and capture more value over time. Managed by Q, as an example, is one where it started providing cleaning services to commercial office space, expanded those first-party services into maintenance and supplies, and now has expanded further into having a third-party marketplace where any service or product that an office needs can be sourced, scheduled, and paid for through Managed by Q. So that's a pretty good example of the types of companies that we're interested in within the PropTech space.
So from your perspective as an investor and advisor to entrepreneurs, how is the real estate asset class doing in technology compared to the financial, health, and other industries?
It's an interesting dichotomy in PropTech because I think the property and real estate markets are much more open to innovation and have much more alignment of incentives than some other verticals like finance and health. But the amount of entrepreneurial activity relative to finance and health is a bit lower. And so from our perspective, that provides a great opportunity for entrepreneurs and investors who are focused on PropTech, because that gap will close over time as more and more people recognize that property owners, managers, people involved in the buying and selling process within property and real estate are seeking technology solutions in a way that may not necessarily be true, and adopting technology solutions in a way that may not necessarily be true in finance, health, and some other industries.
Interesting. Given that landscape and the kind of counterintuitive scenario that real estate actually is more open to technological innovation rather than some of the others, but there's not as many entrepreneurs in it, what do you see as being hot now in real estate technology? We hear a lot about mapping, virtual reality, augmented reality, AI. Is it any of these, or are we still trying to just disintermediate brokers?
I guess the answer is yes. We don't really think about what's hot now in real estate technology. We think about within the real estate value chain, where are there inefficiencies or where are there data silos that can be broken down? And the things you described, whether it's AR, VR, or artificial intelligence or mapping, those are just tools and technologies to help address those inefficiencies or break down those data silos. So we don't think so much about the technology itself. We think about the actual solution and the pain that's being addressed. And from our standpoint, there are still many, many places in the real estate value chain that are ripe for innovation. We don't really talk about it as disruption. We really like to think of our founders as disrupting their industries with love rather than contempt, meaning that they tend to be people who come from that industry, who appreciate the value of that industry, but see a way of doing things better and a future that should exist. So we're really focused on the solutions as opposed to the technologies that drive those solutions, if that makes any sense.
It does indeed. And is there any particular kind of real estate technology startup that you would like to see being created that perhaps you're not?
I continue to be really interested in mortgage as a category within real estate, consumer mortgage and residential mortgage in particular. I still think that there's a huge opportunity to improve the experience for all of the stakeholders there, but aligning the incentives of all those stakeholders is really difficult. And then within real estate on the commercial side, I think there are a lot of second order effects of autonomous vehicles that will impact real estate in cities. And I'm really interested in seeing companies thinking about that problem.
We are speaking today on the MetaPropcast with Satya Patel, partner and co-founder of Homebrew. Satya, Homebrew is headquartered in San Francisco. Is PropTech still largely obscured in Silicon Valley by the fog of the wider technology ecosystem, or is it emerging more?
I'd say that's a fair assessment. I think it's still not thought of amongst the top industries where entrepreneurs and investors are focused in terms of technology innovation. As you mentioned earlier, finance, healthcare, education would all rank above PropTech. But I think it's becoming more and more obvious to people that there's real opportunity there, as I said before, because the constituencies within the property and real estate market are clearly seeking and adopting technology at a rate that may not be true in some of the other verticals.
And how do you view PropTech's growth rate compared to other technology startup sectors? Is it gaining a greater share of VC dollars?
I'm not sure that it's gaining a greater share of VC dollars yet, but I'm not sure whether that's caused by a lack of interest amongst VCs or a lack of startups, relatively speaking, that are focused on PropTech. The other interesting thing is I think amongst VCs, not many of them have very much familiarity with that vertical relative to some other verticals. And so there is a bit of education that needs to happen, which makes it more difficult for PropTech to capture more share of VC dollars. I still think we're early within the PropTech sector, but it represents enormous potential.
We're about at the end of our interview, and you're out on the West Coast. We at MetaProp are here in New York City. Although the world is more concise and united today through technology than ever before, what are you seeing or thinking that perhaps I haven't asked that we've missed on our side?
Well, you touched on something right there in terms of the differences between the New York ecosystem and the Bay Area ecosystem. About a third of our investments are actually based in New York, even though we're based in San Francisco. And the reason for that is we see that startups that are focused on the indigenous industries in New York, real estate and property being a perfect example, in many cases have an advantage relative to their valley-based peers who may not be as close to some of the industries that they're focused on. And so we think that New York, particularly in the context of PropTech, is an incredible market, and about half, if not more, of our PropTech investments are based in New York to reflect that fact.
Well, that's interesting, and of course, we agree.
Yeah.
But we're looking for companies and observing what's going on worldwide, and it's a pleasure to speak with you today. We've been speaking with Satya Patel, partner and co-founder of Homebrew, and thank you, Satya, for your time.
I appreciate it, Philip. Thanks for having me.
You have been listening to the MetaPropcast, the podcast of innovation in real estate technology, produced by MetaProp NYC. I'm your host, Phil Russo. Thank you, and hope to have you with us next time.